Alright guys, you saw the trade idea in the breakdown more or less and the execution of it on the live recording, which I just fast forwarded a bit just to get things going. But now we're going to have a look at what happened. And we have a blank chart, so I'm going to use the bar replay mode now, obviously, because I want to explain it. But you got the drill, you saw what I was doing, so let's have a look. So first of all, we have this buy side liquidity above this high. We also had big news, CPI, or no, what was CPI, PPI? So we have some major red news coming out at 2:30, and that's 8:30 New York time. So waiting for that to pass and then looking just at the first 3 hours of the session, just using those 3 hours to base a trade and find an entry. So let's have a look at that. You know what, I'm not going to use the bar replay mode. I'm just going to use it just that we have a little bit more data or better place to work with. Okay, so let's just first of all mark out the first 3 hours of the New York session. So we have it starting at 2, 3, and then 4. Those are the 3, and then 5, the last hour, the third hour of the session. Okay, and we'll just quickly make that black, just so that we read a little bit easier. And then this one as well, we'll keep that one dotted, and this one black as well. Okay, so that's basically the time that we have to work in. Okay, now we're going to just go to the 1 minute and we're going to have a look at what happened in here. We had the news release and then we had all of this up and down chips or price action. We don't need to worry about that. First hour, so here's the key. The first hour made a high and it made a low. The second hour created a low, which turns into sell side liquidity, and then also created a sweep of liquidity with a break towards the downside. So if we just zoom in a little bit over here, the price made this high, we pulled back, made a higher high, very marginal, but there's a little higher high in that wick, and then we broke down structure. So I took this wick break as a structure break, and then looking at the fair value gap, price reacting off of the fair value gap over there, which then gave us a entry area for where we could trade into. We also have a order block over there, or a level of supply and demand. So as price then entered into that area, that is then where we're looking for a sell with stop loss above the high. Take profit is at the nearest sell side liquidity. So that is in general the idea of the trade. So if we just go into a little bit more detail and add some annotations in here, this is sell side liquidity created in the second hour of the session. So if you want to structure this, we can have a look at the first hour like that of the session, and then we have the second hour, and then the third hour as well. We either will get a trade in the first, second, or third hour, and most of the times, majority of the times, the trade setup tends to happen in the second or the third hour, and I think that is quite important to know. Looking then at what does the second hour do with the information that's provided in the first hour of the session. So basing the trade off of what happened, what information do we have in the first hour? We see price sweep, structure, our liquidity above the high, see some impulsive displacement moving down, respecting a fair value gap, trading lower. Then we see price creating structure, bearish structure on the inside. So we see price trade lower, creating lower lows, lower highs, lower lows, lower lows, lower lows. A push up, taking out liquidity that's resting above these highs, just for price to continue down lower and reaching ultimately the sell side liquidity. So it was a bit of a nagging trade in the sense that it did take some time and wasn't as beautiful or quick as I would have liked, but the idea is, or the principles remain the same. Using the first hour's information to base trade in the second hour. If the second hour is not giving us enough information, basing then trades in the third hour based on information on the second hour. So let's have a look at if we did not take any of these trades in the second hour, if we didn't take the trade in the second hour, rather if we had taken the trade in the third hour. So let's base our trade idea from information in the third hour. So we can still see that this area of supply and demand is intact. We've broken structure towards the downside. So based on the information in the second hour, we can potentially base a trade in the third hour. Price moves into this area. We have our key for taking a short here is that price is bearish. We are trading bearish. We're breaking structure lower. And then we have this manipulation in the mid, almost in the mid, around the mid hour of that third hour. We have this big push up in a market that is bearish. We are moving down on the higher time frames. We are bearish. So then basing it off of what's happened in the second hour, seeing that area of supply and demand, price taps into it, stop loss just above the high, still with a take profit down the low at the sell side. That could have given you a even great trade idea. So I hope this makes sense. Important understanding basing trades off of the first 3 hours in the session. Guys, I think that is it for this video. I hope it made sense. I hope you enjoyed. Short and sweet, and I'll see you in the next one. Take care. Bye.